All right, you're welcome, guys. This is another session of the gold run. We call this a gold run because we talk mostly about trading gold and how to really be profitable trading gold. So gold is one of those very volatile assets we have in the financial markets. And volatile means that the daily range of movement in gold is pretty large. And because that daily range of movement is large, the potential for profit in gold is really, really good, right? So it's one of those pairs that if you really understand how to trade, you really know how to trade, you know where to enter the trade, you know where to exit the trade, you can be very profitable with trading gold. Okay, so there are several people I know who they only trade gold. They'll tell you they are gold diggers. They only trade gold, right? I am a gold trader as well. So when I talk to you about gold, I know that gold is something that's very, very interesting to trade, right? Very profitable, could be very profitable. Yeah, but you have to know how to trade it, right? So what drives gold? Gold is driven more by, geopolitical events. Geopolitical events. When you hear there's conflict in the Middle East, when you hear something, America did something, when you hear an alliance of NATO, America, China, America, the UK, Australia, they came together, put forces together, and they did something, militarily, right? All of these are the things that influence the value of gold. When the world anticipates a conflict that affects any major region in the world, be it America, be it the Middle East, be it Europe, whenever there is a conflict, there is a potential conflict, there's an anticipation of a conflict that affects any major part of the world, gold is the beneficiary of such activity. Gold is the beneficiary of such conflict. Why? Because gold is one instrument that we call a safe haven asset. A safe haven asset. So a safe haven means that whenever there's turmoil, this is where you go hide your resources. Whenever there's turmoil everywhere around the world, whenever the stock markets in the US is crashing, whenever the stock market in Europe is crashing, whenever oil price is crashing, whenever there is conflict somewhere, gold is the go-to asset for most investors. And when most people, especially big money, starts to chase a particular asset, what happens is that the demand increases. When demand increases, economics tell us that price tends to go in the same direction. So when price starts to go in the same direction, we start to see price appreciation. We start to see price appreciation. Right? So this is a major thing about gold. Gold is seen as a store of wealth, a long-term store of value. So investors feel that when there's a chance that I could lose the value of my stocks, or there's a chance I could lose the value of my dollars, or whatever else currency is there in the world, what I would want to do is put my money into gold. So gold benefits from all of those things. So when you look at the market right now, you will see that the times where gold have gone to all-time highs has been around conflict periods, around COVID, around COVID pandemics, around huge times of huge conflict, Russia-Ukraine crisis, Hamas-Israel crisis. All of those times were the times where you see gold literally face one direction. You see gold going just in a single direction. And that is towards the buy side, right? Now, of course, whenever any of those events are not happening, gold has a very interesting price action as well. So the events and conflicts and all of those events around the world I just mentioned is what we call fundamental analysis. That's a fundamental perspective of trading gold. Now, the technical perspective of trading gold is where you get to look for opportunities in the financial market on a daily basis, right? So there's no conflict today. So what is gold going to do? How am I going to trade today? That's where you want to look at what's happening in the market, and then you're able to follow the trajectory of price in the market to be able to make profits, right? So the price action of gold is very, very smooth and very clear. But then when you look at gold from a higher time frame and then try to map it into a lower time frame, the tendency that you do very well with gold and make a lot of profit with gold is very high, right? But when you go to lower time frames and you look at 5 minutes, you go to 15 minutes, you look at these time frames that are very short, right? When you look at these time frames that are very short, they don't tend to give you a very clear picture of how to significantly catch gold. Now, when you are looking at trading gold, you are looking to get good moves in the market. That's why I said gold is one of those very volatile instruments right there, right? So it's not an instrument you're trading and you're looking to get 30 pips, or you're looking to get 20 pips, or you're looking to get 30 pips, 20 pips, 10 pips, 15 pips. No, right? Now, of course, if that is your goal, that's not a problem. If you are such a scalper in the market, you just take a few pips in the market and you're out, that's fine. There's no problem with that. But if you want to be able to grow a small account could be $1,000, it could be $500, it could be $2,000. If you want to be able to grow that account to become 10,000, 15, 20,000, and you are trading gold, you want to be able to consistently pull $1,000, $2,000 from the market every week, right? You are going to have to look beyond just those scalping moves and begin to try to understand the market from a top-down perspective, from a top-down analysis perspective. Where is gold going? So what you want to do is you want to understand the trend of the market. You want to understand the trend of the market. And to be able to understand the trend of the market very well, you are going to have to take into account what the US dollar is doing. Now, if you notice, gold has this symbol called XAUUSD, XAUUSD. Now, from basic forex trading, when you have something like XAUUSD, you know that the first currency here, XAU, is what we call the base currency. And then the USD is what we call the quote currency. So these currencies are more like in a tug of war situation. Pardon me. So these currencies are more like in a tug of war situation. And what that means is that when one rallies, when one goes up, the other one tends to come down. So in this case now, USD is that currency that powers most of the world's transactions. USD powers most of the world's transactions. Now, if USD is powering most of the world's transactions, you want to be able to, and you have a currency or you have an instrument that is very correlated to the USD like this. You want to be able to pay attention to what the USD is doing to be able to trade that instrument properly. If you ignore what the USD is doing, you may find it difficult trying to get a clear direction of where that instrument is going, the other instrument is going, in this case, gold. So XAU is gold, USD is USD, right? But of course, when we take it as gold, right? But then you want to be able to understand what is it that the dollar index is doing. We call this the dollar index, USD. What is it that the dollar is doing that can help me understand what gold is doing or gold is likely to do? You see? So that's where you start from. What is it that it's possible to get 1,000 pips on gold, 500 pips on gold? It's possible, but the only way you can do that is if you get the direction of gold, you understand the direction, you understand where gold is going, then you'll be in a very good position to be able to capture those moves in the market and make very good profit. So let's look at what is the dollar doing? What is the dollar doing? What is the trajectory of the dollar right now? What is the dollar trying to do? This will help us understand what gold is trying to do as well, right? So let's go to a higher time frame and quickly look at dollar. Then we'll come back and look at gold. Okay. So for a while now, the dollar index had been selling, right? It had initially been selling. Now, it sold to a point, sold to around the 100.7260, and then started to pull back. So the way the market works is that the market does this. The market does this. The market moves like this. And the market does this. So this is what we call an impulse. This move here is what we call an impulse. This one here is what we call a correction or a pullback or a retest. We call this a correction, a pullback, or a retest. That's what we call this. Then this is what we call a continuation. A continuation. Now, that is how the market functions. So over here, you can see that price had made an impulse. This is an impulse. Price had made an impulse. This is the dollar index right now. What we are trying to do here is understand what the dollar index is doing to help us understand gold. Why? Because the dollar powers most of the world economy. Even all the transactions happening in gold is powered by the dollar. It's powered by the dollar. So what is the dollar doing? Is the dollar weak? If the dollar is weak, gold will be strong. That would definitely fuel the strength of gold because they have like a tug of war kind of relationship. One is strong, the other one is weak. The other one is weak, the other one is strong. So they have a tug of war kind of relationship, right? So yes, so now we see an impulse here. We see an impulse here. Then we see a correction. We see a correction. Then we would see a continuation. This is the direction that we expect the market to go. Right now, we saw an impulse. Then the correction is currently happening. The correction is currently happening. Now, if I go on gold, you will see that to an extent, gold and the dollar index have a relationship that is in opposite direction. So as the dollar index right now seems to be buying, you will see that gold tends to be selling. And that's because of the way this pair is the way this currency is paired, the way this instrument, the symbol of this instrument is paired. Right? So now let's look at where is the dollar index going to go? Now, from what we can see here, we can see that the dollar index is still going to move from this current position where it is to this up here, which is from the current 103.38 to the 103.94. That is around where we should be expecting the correction of this dollar index to terminate. Once the dollar index terminates there, it will start to sell again. The continuation will start, right? So it is still correcting and buying. And for that reason, we are expecting gold to continue to sell at least to a certain level. We expect gold to continue to sell at least to a certain level, right? So let's look at that now. Let's go to a lower time frame. Let's go to a daily chart here. So right now, what we are expecting here now is this. We can see that dollar index is still moving. We expect it to move all the way to the 103.950 level. Around here is what we expect the dollar index to get to. So when we look at go to 4 hour now, what we are trying to do now, we're trying to establish a direction so that we can have a better clarity of the market. Right? Now we're expecting dollar index to go all the way here. So we're expecting a buy. You see? So we're expecting a buy on the dollar index. So since we're expecting a buy on the dollar index, what else are we going to be expecting what else are we going to be expecting on gold? We're expecting gold to sort of sell. That's what we're expecting. So let's go to gold now. Now, when we look at when we look at gold here, we'll see that gold has been coming down too, but this area where it got to now, when you are studying gold, you have to use, there's a tool that you need to add to your arsenal to study gold and get a very clear picture of what's going on gold. And that is what we call the Fibonacci retracement. Because when you see a market do an impulse, that correction, you need a tool or an understanding of the market to let you know how far that correction is going to go. Even with this dollar index, the reason why we could know that the correction is going to come here is because we can see from using a tool like Fibonacci, it tells us where the correction is likely to get to. See, it tells us where the correction is likely to get to. Now, for gold here, we are expecting right now from here. First of all, look at this. When I do this right now, I can see that price literally got to this area. This is the area I'm talking about now here. So this area here, this is not a Fibonacci class, but I'll just show us how it's used. So we see an impulse here, we see a correction, we see a continuation. So now we are expecting that gold is going to sell from here at least all the way to this area. Because dollar index is buying. Once dollar is buying, gold is going to be selling down to this area. So now, if you look at lower time frame here, go to a lower time frame here, you will see that this area here is a resistance zone. And what price does at a resistance zone is that price tends to sell at a resistance zone. Price tends to sell at a resistance zone. And then, so now let's look at it. So if price is selling at a resistance zone, how are you now going to trade? So you'll be looking for trades around resistance zones here, sell trades. So what we have done now is this. We have gone to a higher time frame. We have looked at the dollar index. We have looked and we have seen that the dollar index is still going to make a buy move. Is likely to make a buy move, right? Now, from there, we can also see that the gold is therefore going to make a sell move, right? Now, the point here is, now that we have already clarified that we are expecting to see a sell on gold, we have already seen an area here where gold has got into and started selling. Gold has already started making the sell move from what we can see here. Gold has already started making a sell move. So what we are going to do now, what we are looking for now is to get on sell trades. Get on sell trades. But where is the sell trade going to be? Yes. So that's what we are going to do here now. Let's go to the 1 hour chart. Let's try to find an opportunity for a sell on gold. All right. Now, yeah. So again, I take my Fibonacci tool and I put it here and I'm trying to see where is gold, what am I likely to see on gold? Okay, let me get this off. This is what I'm expecting to see now. This is where I'm expecting price to get to now. This is where I'm expecting price to get to now, right? So once price gets here, I am therefore expecting that price is going to pull back to this point. Remember, this impulse correction continuation that I just talked about it's useful on all time frames. But the reason we go to a higher time frame first to look at an instrument like gold is because we want to be able to see a clear direction of trend, a clear trend. We are always told that the trend is your friend. The trend is your friend. The reason why the trend is your friend is because the trend, when you trade in direction of the trend, you are able to catch a market move that can be very profitable for you. You are able to catch a market move that can be very profitable for you. Instead of targeting little moves right here, your risk to reward will be very good. When you make a risk, what you want to do in trading is that you want to risk little and make much. You want to risk little and make much. But when you are able to look at the market and you're able to understand the market from a very clear trend perspective, then it will be very possible for you to get a very low risk, high reward trade. That's what you're looking for. A low risk, high reward trade. You are looking for a low risk, high reward trade. That's your goal. Okay? So that's what we are trying to get now. A low risk, high reward trade. Okay. So what we're expecting now is that price will move up to this area here and then sell. We already established that we're looking for a sell. So this is what we're expecting price to do now. This move now is what we're expecting. So what's going to be our trade here now? What's going to be our trade? Let's look at it. So we're expecting a sell trade. So we're going to be looking to let's get on sell trade somewhere around here. Then our risk now, we're going to have our risk somewhere here, somewhere around 50 pips is going to be our risk. Our risk is going to be around 50 pips there, 50 pips. Then let's look at where our reward is going to be. See, so we said this kind of trading helps us get good risk to reward ratio, good risk to reward ratio, right? So here now you can see our take profit now is about 250 pips. 250 pips. That is a target. That's what we are targeting on this trade right now. 250 pips. That's the overall move we are trying to get right now. So what we are going to do is we're going to break this down into take profit 1, take profit 2, take profit 3. All right. So now we can see based on the setup we have here right now and the analysis we have done, we can see that we have a very good trade here with a good risk to reward ratio. So we are risking 50 pips to make 250 pips. So that means if you're taking this trade with 0.1 lot size right now, you'll be risking $50 to make 250, to make a potential 250. Right? That's what it's looking like here right now, right? So now let's look at what the entry would be. So we will take this place as our first take profit. This place will be our first take profit. Then our second take profit is going to be around here. Our second take profit is going to be around here. Then our third take profit is going to be all the way down to this area here, right? So let's look at how that trade is going to play out now. So the first trade, the trade we're going to let's put out the parameters so that we can take this as our trade. Yeah. So this is going to be this trade is still setting up, right? This trade is not totally set up yet. We're expecting price to move up. So we are going to use a pending order for this trade. We are going to use a pending order for this trade, right? So that pending order is going to be a sell limit. So we are looking at a sell now. So this pending order is going to be a sell limit, trade. So we are going to say gold, XAU USD, sell limit trade. So the trade is going to be a sell limit. So our entry price is going to be at, let's look at the entry price here. So our entry price is going to be at 2029.95 or 2029. Let's just make it, 2029.95 is fine. 2029.95. Okay. Our entry price is 2029.95. Then the next thing we're going to do is, what is our stop loss? Stop loss. Stop loss is okay. That's 2034.95. That's our stop loss. Stop loss. Then we have take profit 1. Take profit 1. Take profit 1. We have take profit 2. And we have take profit 3. Okay. So take profit 1 is going to be at 2024.29. Take profit 2 is going to be at 2017.09. Then take profit 3 is going to be at, let's look at this now. Take profit 3, this is going to be take profit 3. $20,004.95. So that is going to be our trade parameters for gold going forward, right? Now, so someone will be asking, how do you do take profit 1, take profit 2, take profit 3? Now, what you can do is this. There are two ways. There are two ways to do this. You can enter one of these trades and decide that, okay, I'm going to take one lot, maybe one lot size or 0.5 lot size or something. Then when price gets to take profit 1 level, you will close out a portion of that trade. Or you can decide that, okay, I want to use 0.3 on this trade. I'm using 0.3 on this trade. So I'm going to split that 0.3 into 3 trades, right? Instead of taking 0.3 as one trade, you can take 0.3 into 3 trades and break 0.3 down into 3 trades. So you now have 0.1, 0.1, 0.1, right? So you take one trade at this entry price, you set your stop loss, you take your take profit at TP1. That's one trade, 0.1. Then 0.2, you now take another trade, 0.1 again, your lot size. You take the entry price, you set your stop loss, then you set your take profit 2 as your take profit for that second trade. Then you take a third trade, 0.1. Remember, you took your 0.3 lot size and you broke it into 3, right? So you don't need, you are not taking 0.3, 0.3, 0.3 3 times. No, that will be triple your risk, your normal risk on your account. No, right? So whatever lot size you want to take, you can break it into 3. Divide that lot size into 3. Use one to take one trade. You will take the 3 trades. You will take the 3 trades and use the same parameters, the same entry price and stop loss. But you will your take profit will be different for the three different trades. That's just how you do this. So you take the third trade here, you use the same lot size you use for these 2, which is 1/3 of the lot size you want to use. And then you set your entry price, you set your stop loss, you set your take profit. And your take profit then is going to be at take profit 3. So you have 3 trades running, so that what the goal here is this: when price moves, when all your trades trigger in the same place and start running in profit, when price gets to TP1, one trade will close, you have banked some money. When price gets to TP2, another trade will close, you have banked some money. When price gets to TP3, then your final trade will close, right? So that's where you are managing your risk, you are managing your trades, and you are taking profits as time is going on. As time is going, as a price is moving in your direction, you are taking profit. As price is moving your direction, you're taking profit. As price is moving your direction, you're taking profit, right? Exactly. So this is how you're going to take this trade. So these are the trade parameters right now. Please take note of this. You can take out your MetaTrader or take out your Vantage app and then set these trades right now. These are the parameters of your trade. Let me see. Let me copy this and put it in the comment section. Okay. Let me put it in the comment section. Okay. So I'll put that in the comment section. You can copy it from the comment section and then set your trade. All right. So this is the target on gold we have right now. Now, once gold comes to this point, and when gold comes to this point, and then gold hits this bottom, we are still, because we still expect the dollar index to rise a bit, we might still see gold break out of this point and keep coming down here. From what we see on the higher time frame, it looks more to me that gold is still going to come to this area here, this level of 1,980 level. I feel that gold is still going to come there. And when gold gets there, we will see a significant buy. The kind of buy, this kind of buy, you know, we'll see a significant buy move. That is what I'm expecting to happen, right? So, but then this area we are targeting right now is the first move that we are expecting to happen. Once this has happened, once this move now we are taking here, once this one has happened to all the way to this area, then that's good. We have banked a lot, would have banked a lot of profit from there. Then we'll now wait for price to give us a good price action here. We need to see price break out of this point. Once price breaks out of this point, we will repeat this same impulse, correction, and continuation. We will repeat this when price gets here. All right. So until price gets here, we will focus on this move right here, right now, up to this area. I expect that price will sell from here and get here. So this will be where we'll terminate our trade for now, right? Going forward, we'll be able to see when price gets here, price will tell us what to do. That's the thing with the market. The market is, if you're patient, you look at the market properly, the market will tell you what to do at certain levels, at certain zones. The market will tell you buy or sell. But it's only when your emotions are involved and you give yourself a bias of the market or say, no, the market wants to sell. Oh, the market must sell when it gets here. The market must buy when it gets here. The market mustn't do anything. All you just need to do is follow the lead of the market, as it were. Follow the lead of the market. Let the market tell you what it's about to do, and then all you do is you react to it. You react to what the market is telling you. You don't set direction for the market, you react to it, right? Yeah. Okay, so do we have any questions? I will stop recording right now.